Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, September 6, 2024. It's 11 a.m. Eastern Time on the button. Wanted to get this one out because we just hit key support levels on NQ, ES, everything else, and I wanted to get these out to you. So earlier today, posted some wedges that were forming on the futures and the ETFs and pre-market. This is the downtrend line. So we had this morning. That's what the wedge looked like. We still have very much the divergence, and we're at the only thing is we were at the top of the gap earlier. We're now at the bottom. Well, on ES, we're looking at the future NQ here. I'm sorry, NQ. We're at that really nice 18,490 to 18,554. It's more of a support zone. And that was, I've been harping on, as kind of the last straw, I believe, support. It's a level I do think will go and will be taken out, and then we'll start to really waterfall. But I don't think there'll be one last hurrah. So as I said earlier, and just only in my active trading account, nothing's changed in my longer term intermediate outlook. Still short in the swing longer term accounts, but just reversed in this morning and just added some here because I think this is a really good level. I told you my stop will be a little bit below that. I'll get to the index charts in a second for the ETFs, but that's it. Positive divergence on the futures. Nice support. Now there's a whole lot of bearish stuff going on today as of this moment, including this fact we're down again today. I think again this is probably one of the most important days, technically speaking, that I can think of in months, short of the big bearish engulfing candles we put in at the top on QQQ and the semiconductor sector and NVIDIA and everything else. This is a make or break it day for the markets. These are support levels I think will go. I'm just suspecting we could get one last hurrah. I'm not super confident, but I can tell you, as I often say, support is support unless broken. And when you fall oversold to support with positive divergences, and the initial sell-off today was weaker than expected jobs data. I've been telling you there's a clear trend. These aberrations been going up and down, but the trend is clearly showing that the job market is rolling over, and it's pretty much hit that point. Kind of that escape velocity point on the charts, as I've showed you, where it's inevitable. We've never seen a turn like this where a recession hasn't followed and a bear market. So again, to reiterate, my long-term view hasn't changed. Today, if they crap out, if we pretty much take out, especially if we close below today's lows where I started this video at, then yeah, that's going to be ugly, and we'll probably start that waterfall type selling next week. But here it is. These are the levels you have. About 18,490 right there in NQ, bottom of that trading range. The downtrend line, which we hit this morning, it's still very much a valid trend line. Initially, my plan was to add if and only if we took that out and or this 19,091 level just above it. That's the BOD level, but I decided to just add here, and I will stop and out and go back short for the weekend if we close comfortably below this level. So, and then look, bounce targets. Here's the issue, guys. This is a Friday, unfortunately, and that means 2 extra days overnight risk. And my longer-term, intermediate-term outlook, it would have to take one heck of a rally today to get us up to those trend lines. I showed you that as a potential maximum bounce target. I had some other reaction points. That it's not going to happen today. It's too high up. It'd be about almost a 6% rally. So at best, if we can reverse here, we get a little hurrah back up here. Maybe to 19,091 or not. Again, I'm not sold on it. Nothing's changed in my intermediate term outlook. The bounce so far got rejected at the downtrend line this morning. Let me show you ES, and then I can move on. I want to get the video out to you as quick as possible. ES is right here. 60-minute chart also. Big support. This was resistance back here, breakout to new highs, successfully back tested it, successfully back tested again. They bought it, and then the breakout failed. We did come back up through there, but we back tested once. So anyway, it is pretty good support. It is a support level again that I have little doubt will go. It's just a matter, does it go today or next week? or does it go, a couple weeks from now after a bounce? Today can determine that. And so far, the way they've sold it this morning, after that right there, you could see they failed. That's the same wedges I gave you, the downtrend line. As I always say, whatever time frame you're trading on, all that matters is how you close the candlestick for that period. And so that was a non-breakout, failed breakout. It was an intra-session, so it's not even a failed breakout. We never broke out. You had to print a 60-minute close. What we did is we rallied right up to that resistance level, and then they stepped in and sold it. But again, that's why I'm doing this video. We're at support. It's even a more objective level to bounce off of or to buy than it was this morning, because we just had the gap support on SPY on the ETFs, but these are the actual futures, and that's it. So you've got the positive divergence there. Let me show you SPY. Here's a daily chart of SPY. That's that same level. Like I said, that was a breakout to new highs, successfully back tested it, went on to new highs, came back in here. And I've had the level there at about 543. So we're back to that level now. Again, longer term, pretty clear where we're going, in my opinion. But it's a matter of near term right now, what I'm looking at. So here's that gap that I was talking about today. There's the gap. We entered it. We backfilled it. As I said, gaps once entered are often backfilled. And you had a lot of momentum going down there. We'll see how this 60-minute candlestick closes here. And then QQQ, 15-minute chart I give you. Yep, QQQ, there's the bottom of the gap. We're flirting with it right now. But again, what you don't see here is that very good support on ES and NQ that I gave you. And that's why I like to look at both the futures. There it is on SPY. Technically, the bottom of the gap on SPY. I had a line here earlier on the top of that candle. If you zoom in, a gap by definition is where you close the previous day, which was right here. And so we're a hair below it right now. Well, no, technically right off. 543.70-ish right there, and we're right about that level right now. So there it is, guys. It's kind of do or die. If we go any lower, we've taken out the divergences on the ETFs here on the 15-minute chart. We're clinging on to them by the skin of their teeth right there. You can see if we go much lower. And now let's look at the other, probably the two most important stocks today, in my opinion, are, as I mentioned, Broadcom, who reported last night. Before they reported, I had called that one down after earnings based on the technical posture, and surely went down. It's down 10% today. It's below the trend line, which is very significant. Remember, we had a brief one-day pop there, but it tested the 200s and bounced. Now, the fact we already had that test of the trend line and the 200s and bounced, that's it. So what it tells me is, yeah, we're back there now, but the odds of another bounce are much, much lower because we had that first reaction there. That was the morning of August 5th when we reversed all swing short positions. Remember, what I posted today is only in my active trading account. Long-term trades have not been affected. I'm still short there by a pretty good margin too. And after today or next week, if we follow through, then it's probably, like I said, we're at the all-in moment where it's kind of the final straws here. So Broadcom, again, second largest semi in the U.S., big AI company, and it's just showing you what's this AI bubble has popped. All right. And, it's one thing to say, okay, it's just a correction, Randy, don't get ahead of yourself. Any move that's within a range or above support, that's all you can chalk it up to. But when you take out a primary bull market uptrend line, which we did here in Broadcom, especially if we close the week below it here, take out the 200s, again, they're the benefit of the doubt level. That's where we cut one day, hit, bounce. Then it opens the door to my next target, which I still have a high degree of confidence will be hit. It's just a matter of if they can do this today, park it back up here. And remember, I had 143.57 also as key support as well at price level. So right now, this is 110% bearish. Make no mistake about it. No way to spin that anything otherwise. However, if they can stick save it and get it up back above that level today, then not so much because it's intraday. This is a daily chart. All that matters is how you close the day. And so right now it ain't looking so good, but I just showed you, it's also coming up on the 200 days moving averages. And let me show you NVIDIA starting to crack. It is at this minute below the trend line. If I want to tweak the trend line, I could come in and capture that August 5th low. Remember, we had a lot of what I call momentum fueled overshoot, a lot of momentum and velocity going down into those lows the morning of August 5th. And so again, you could tweak the trend line a little and say you're on it, but I like, this is the best fit. This is how I've had it drawn before. It comes in and captures all these other reactions, and we're cracking below it now once again, and just shows weakness. And it hasn't changed my longer term outlook. You have my long-term targets. You've had them for months now on the video where I think the stock is going in the coming months. That's on the weekly chart somewhere here. There it is. All these long-term targets. So, but coming back to the daily chart, we break it. We have support at about 95.50 in the 200-day moving averages. But again, it's done. This divergent high I view as a top, and all corrections start out kind of mild-mannered because the masses, the bulls, the Pavlov's dogs, they keep buying the dips. What happens is you reach a point, what I call, I make a lot of terms up in trading, I'm going to call POR, point of recognition. That's where the masses recognize something else is going on instead of just another good dip buying opportunities like we had here and along the way. Now, we're not there yet. POR, to me, is when we take out these levels here. Let's talk. I'm going to go over the semis real quick. Semis I gave you back here recently. Semis have been shorts on and off. Most recently, I gave you long-term targets based on this daily chart here. And we've effectively we're coming right up on that trend line now. Depending on which board I put it on, we're close enough. You might consider that hit. Technically, we're not all the way there yet, but close enough. So that was right here recently. I laid it out with a break of that trend line. We hit T1 right here, 216.34. The trend line we're very close to. Once we break the trend line, that's also key support. Remember, this is the uptrend line off the October 2022 lows. And as I've said, there is a next target down here, but just like QQQ, we're going to be at that POR, I believe, or point of recognition, where we're going to waterfall down. So it's do or die for the market right now, and that's why I wanted to get the video out to you guys. We're testing some very important support levels right now, and right now it doesn't look good because, as I just showed you, as I speak, NVIDIA's below trend, Broadcom's below trend. I'm going to show you a few other semis. Quite a few are on support. But remember, in a bear market or correction, you're going to go down, you're going to hit supports, and there's going to be that point where the first couple supports, like we've been doing, you trade, you get a good bounce. Dip buyers are still that buy the dip mentality is burned and it's seared into their brain. And that's why it's very lucrative to game those initial targets and trade. And we might even still be at that level. We might see if they step in here today. But soon, like I said, we're going to hit that POR, point of recognition, where you're just going to go on through the levels. So what I'm going to do real quick to take this video home is show you some of those other key levels. So NVIDIA, again, at trendline support. Next support below 96.23, and then the 200-day moving averages. And again, when I say it's at support, it's actually right below support right now, but in close enough proximity on a daily candle to say, you can't say definitively that level's been taken out. You either need to see a solid daily close or such a big move down through there that there's little chance. In other words, if you get 2 p.m., 3 p.m., and you're down here, at best you're going to rally back up and still park under the trend line. But right now it's anybody's game. That's what I'm trying to say for 4 p.m. close. Taiwan semi. I've covered the semis a lot, so I'm not going to hit each one unless I see something that stands out. The semis have topped. That's made that case clearly. And but Broadcom I already covered, coming up on the 200s. ASML. Here's why I'm doing this video. There's a lot. This is big support. This is one of my targets right here. We hit it on the morning of August 5th when we covered all shorts and went long in all accounts, including the long-term accounts. We bounced, but we're back to it and we're cracking now. And again, that supports the case. I said you hit it once, that's where I expect a reaction, and we usually trade a reaction on the initial tag of each of my targets. After that the target is hit and you get the tradable bounce, it opens the door that the next time you might go through there. Not always, but again, right now we are, as I as I do this video, we are slightly below it. Again, within spitting distance. So if we can, if the markets can rally off the support levels I started the video on, and the tech sector can, we may park back on there. But again, is this a pullback that I would buy for a swing trade? No, absolutely not. In fact, I keep getting price alerts. I'm going to go over those. I'm getting price alerts like candy today, so I'm probably going to be. There's a good chance I'll be back short by the time this video is over if we can't hold these levels. Just wanted to show you kind of big picture. Oh, so AMD, again, all these are not levels that I put here today. These are all lines. This one was created back in July of 2023, 132.77. You can see we're right there right now. It was support here. It was a previous reaction and all-time high or multi-year high and a divergent high. So it's a minor support level. It's not a solid one. And bigger picture is, look, guys, bigger pictures. This is the primary uptrend line. And we broke it, and we're below it. So what I'm trying to say here is, to me, the charts, intermediate and longer term, are still clearly bearish. Even near term, even what's happening today, there's just some support levels. But the fact that we're starting to get to that point where the selling's starting to accelerate, and those drinking the Kool-Aid and trying to serve you the Kool-Aid on, in the media, are starting to realize that their whole no recession or worst case scenario soft landing thing, well, that keeps getting chipped away here as we get as each week rolls by, and you get one okay economic report, maybe a little better, and then boom, the trend has been overall the economic reports, the macro picture has been deteriorating. Texas Instrument, coming off that divergent high again. Semis, these are still active long-term short swing trades. Qualcomm at support, another one at support. AMAT, God, look at this, beautiful. I highlighted that recently, the back test, the breakdown, textbook back test, rejection. These have been great trades, down 17% in just the last couple of weeks. And again, a lot more downside to go. This one cracking, analog devices cracked support today, not good. KLAC cracked support, coming up on the 200s again, however. So this is kind of the takeaway as I do this video. Yes, collectively and longer term, I see bearish charts that look like there's more downside. However, very near term, I think we're probably at that point of recognition, and may have it next week where the markets start waterfalling. But right now I'm seeing too many stocks, including, most importantly, the indexes, as I started the video out, at support, at a pretty decent support. And then even though these are bearish charts, you have another, pull back to the 200-day moving averages and or price support levels in a lot of these stocks where you could see the buyer step in today and, rally it up before the close. LRCX, Lam Research coming up on support, 723.79. Micron, right on, look at the primary uptrend line, beautiful uptrend line. And like all the others, just below it. Let me take that trend line's a little too thick. So you can see we're cracking these trend lines. I'm going to pull that up a little bit. It needs to be tightened up. What I mean by that is I didn't have it touching. I want it touching that and touching those. So that's a breakdown right there as well. So collective, look at Intel. This has been my only long semi for a while. And it's still at support, still at the same long-term support level we bought it at. So that same case can be made there, but just, it couldn't pop that. Remember, I told you I had to pop 22. It still needs to, but it got rejected there. It's in this little trading range, back to the bottom of the trading range. And then bearish below that. And Marvel, nothing there really. It's at the 200s. NPXI lost the 200-day moving averages now. They've been buying the 200s, bought it here, and now it's broken down below there. So, but also, look, I'm going to pull a line right here. I'm going to take this one. I'm going to pull this one down to this point. Why did I do that? Because this is our previous reaction. We have two reaction lows there, and we're there now. So that's it, guys. We have a lot of stocks at support, but we have just as many breaking support today. I'm talking the semis. The indexes are at support. Support is support until unless it's broken. So we'll see. They either step in and buy this now, very soon, close it up today, and if so, maybe there could be a rally that carries through the next week. I'm not that optimistic, and like I said, unless they convince me otherwise, I'll be going back short. Probably by the time this video is over or out to you, or by the end of the day. I'm sitting tight now because, like I said, we're at the support levels I just started at in the video, and MPWR. Look at this. I mean, these are just all. These are the semis that haven't fully rolled over. It's certainly come down. It's down 15%, but just getting started. This is a big bearish rising wedge pattern. So when it breaks down and then there's the BOD support, you can see I'll add your target right here if you're interested in this. We're going to have a first stop's going to be 693. Then you can see down here, I'm going to pull that target down, tighten it up a little bit, about 590 before all said and done. But again, this is a bearish pattern, big bearish rising wedge pattern, but it's at support. And so that's why I do these, what I call kind of long-winded videos. When I click through here, the semis look bearish. They're in a bear trend. They're in correction mode or bear market, whatever you want to call it. But I have a lot of them at support. And the market is still, especially the S&P, is relatively fresh off all-time highs. So you can't write it up. We're not at that kind of capitulation, panic selling bear market stage yet. And so you got to be a little bit careful on the short side. You got to be a little nimble there. Oh, beautiful. Look at that. Just love these charts. Breakdown of the primary uptrend line, back test, rejection. So that's it. Hopefully that all makes sense. Net longer term bullish bearish outlook, nothing's changed there. Today, like I said, there's a potential for a bounce. We had a potential this morning. They started to go. They sold it pretty hard so far, and they're at the level now that if they don't buy it and either at least park it here, at worst, park it around these levels today, or rally it up off these levels today, that would give us a chance for a rally next week or to prolong the slide. Otherwise, the big drop, if we close down below here today, futures will probably go down on Sunday night, and we'll probably gap down on Monday and have a bunch of selling next week. But I'm getting ahead of myself, guys. We're only not even 2 hours in the trading day. So let me get the video out to you. Let's see how the day evolves. And we'll go from there. Yeah, what I did, as I've been doing the video, I'm getting alerts going off like popcorn. I just want you to see my alert log. Here's the last 7 days. You can see what's gone off. Let's just check some of these. Let's check, I told you I'd stop the video. Boom, no bueno. But again, maybe a stick save. This is that US dollar, JPY, Japanese yen. That has broken down below the trend line as I type. We'll see if it sticks. Today I just had on WD. This is Walker and Dunlap Specialty Finance. These are stocks that I've had alerts set on. PPC, Pilgrim's Pride. So there's everything in the S&P that's been strong. I have price alerts set on. I have bearish chart patterns, but they're untriggered. And again, the financials just broke down. So did the healthcare sector. And the last of the holdouts, the ones that are doing okay, there's AN just breaking down below trend line. Truist Financial, regional bank, sell signal today. I covered all the regionals before. That one's breaking down. I got an alert on that today. There's Micron, I just covered, just broke the trend line today. Broadcom broke the trend line. I got an alert on that today. JP Morgan, remember these are my alert logs. That broke down recently. Nothing but red sticks so far. I already covered the dollar and the yen. Financials, I already covered that. Remember, these are alerts that already triggered. And so far, so good. So, by the way, I'm still short the financials via the futures and in long-term accounts via stocks and ETFs. Or let's go back to that alert log, and that was it. XOM crossed down over. Oh yeah, even ExxonMobil broke down recently. You can see that was on the 3rd, January 3rd. I had a break below this trend line. So just an increasing mountain of evidence. I have long price alerts set. They're just not triggering. This is where I thought we'd be. And like I said, I thought there might be a chance for a little hurrah today. So far, we haven't gotten it, but we're holding that line that I started the video at. So if we can reverse off there and NQ and ES today, maybe they stick save it. Look at this, just right there, right on the bottom of the line right now. So that's it, guys. You know my trading plan. No more longs if we lose this level today by a good amount, especially solid. We're 60-minute close below there, and then I think the RR is worth even. And I'm speaking both. Nothing's changed on the long-term accounts, but even the active trading account would be worth going home short over the weekend. But if they park it above here and they rally it up, you're going to have that divergence, and that could be the catalyst for a rally next week that then hits those trend lines that I gave you, right? It's not going to be hit today, but this is still very much on the table, what I laid out to you today. We just have to, what has to happen, number one, we have to hold this level, right? Number two, we have to break the downtrend lines. We never broke them today. Right? And number 3, 1991. And then that would open the door for a nice potential counter trend bounce and maybe adds back, close out any longs if you take them into the weekend, or if you're long now, or recycle or add back into some, or increase your short exposure on a rally up to that level right there. All right, I'll wrap it up here, and I will most certainly be doing another update by the end of the day, whether it's screenshots, static charts. If I see something that I missed and should have covered in this video, I will, as always, add it under this post in the comment section. All right, and as well as updates to what's going on here. All right, this has been Randy Finney with Right Side of the Chart, and have a great day.